most entrepreneurs did not get into business because they like figuring out how to pay their own taxes or working nights and
Right.
they like what they do. They love working in their business, but the business stuff scares them. And so I have
Mhm.
clients who tell me, I'm afraid that one day a group of men in suits are going to come knock on my door and haul me away to jail because I did something wrong with my taxes. It just
Mhm.
creates a lot of anxiety because there's a lack of education. And so,
Welcome to Biz Help for You, the show that saves you the expensive learning curve by providing advice from industry experts in every facet of the entrepreneurial journey. Too many small businesses collapse. According to the U.S. Census Bureau, 20% fail within their first year, and less than 35% make it to their 10th anniversary. The goal of this podcast is to change that statistic. So if you're interested in learning more to be a successful entrepreneur, tune in today.
Let me tell you a little bit about my guest today. Leland is a seasoned business owner and entrepreneur with more than 7 years of experience as a financial planner. He's the visionary behind PeaceLink Financial Planning, a fee-for-service financial planning firm that specializes in assisting realtors and self-employed millennials in achieving their desired lifestyle and financial goals. His outstanding contributions to the field earned him recognition as one of the top 40 under 40 professionals in 2023 by Inside Business. Furthermore, Leland shares his expertise as the host of the Self-Employment Success podcast, making his insights and knowledge accessible to a wider audience of aspiring entrepreneurs and self-employed individuals. So, Leland, welcome to the show.
thanks for having me. I'm excited to be here.
Well, thank you for joining me today. Before I get into questions that I have for you on today's topic, I'd love for you just to share a little bit more of your story of how you became an entrepreneur.
Yeah. Well, I will keep it clear and concise if I can, but I worked kind of as a standard financial advisor for a handful of years, what you would think of as an employee advisor of a big corporate firm. And eventually for myself, felt like what I wanted to do and what I was allowed to do were kind of a square peg in a round hole. So
Mhm.
I really wanted to work with small business owners, do really in-depth work, including investments and taxes. But they were really specific on investment management only, and they changed how I got paid every year. And um, I mean, I was just an employee. That was just it. And I had kind of the entrepreneurial itch to say, I think I can do this differently. I would like to be able to deliver more value to the people I serve, and in a way that provides more value to me and my family as well. And so I kind of realized, the path to entrepreneurship was just that. And a lot of my family are entrepreneurs. And so I kind of feel like I had the vision kind of set before me, and I was eager to take the jump.
Perfect. Well, I know we are talking to the small business owner, and a lot of them get confused sometimes on taxes and deductions and all of these things too. So, I first would love you to talk about self employment tax. What is it, and why is it important for those professionals to understand and manage it effectively?
Yeah. Self-employment tax. Well, I'll first start by saying, as an entrepreneur, you have the most tax complexity of the everyday humans in the US or just really in any tax code. But in finance, anytime there's complexity, there's also lots of opportunity. And self-employment tax is one of those key pieces of complexity and opportunity where you can really save a lot of money. I tell people that they should tip their server, not the IRS, but self-employed professionals tend to be the ones tipping the IRS by overpaying in things like self-employment tax. So
Mhm.
for every W-2 employee, they pay FICA tax. They pay their Social Security, their Medicare. It's roughly 7.5% of their pay goes to their public benefits. But what most people don't know is that their employer also pays that same amount for them on their behalf. So for each Social Security number, there has to be about 15.3% in social benefits taxes, Social Security, Medicare, Medicaid, sent to the government on their behalf. Well, when you are employer, employee all in one, you are on the hook for both halves of that. So for the same amount of money, you pay double the FICA tax in the form of self-employment tax as an entrepreneur. And so that part is really not fun for most people. It can really put a drain on people. In fact, I see a lot of folks whose income tax, their weighted income tax is less than their self-employment tax. And so it can really create some drag on their cash flow. And that's why it's so important to find ways to pay that efficiently and reduce that as much as possible.
Mhm. Well, it's so true. A lot of people don't even know that they're supposed to be paying that and don't know they need to be making those payments throughout the year, even, right? It's not like a W-2 where it comes out every time you're paid and you don't have to worry about it. And so I think a lot of people get into trouble because they don't realize everything they're supposed to be doing and making those payments. So do you have suggestions for them to maybe put that on a calendar? Like, how do you tell them to manage that to make sure, first of all, they're saving enough for tax, and also
Mhm.
making sure they're paying it on time?
Yeah. I find that most entrepreneurs did not get into business because they like figuring out how to pay their own taxes or working nights and
Right.
they like what they do. They love working in their business, but the business stuff scares them. And so I have
Mhm.
clients who tell me, I'm afraid that one day a group of men in suits are going to come knock on my door and haul me away to jail because I did something wrong with my taxes. It just
Mhm.
creates a lot of anxiety because there's a lack of education. And so what I first have people do is sit down with their tax preparer or their tax planner and see, okay, what did we pay in taxes last year? There's a few ways you can calculate what you should pay. There's actual expenses, like every quarter adding up what was our profit, what do I owe taxes on, and paying that. That's pretty tedious. You can instead use safe harbor payments where you say, okay, as long as I pay either up to 90% of what I owe or 100% of what I paid last year. If you make more than 150,000, that's 110% of what I paid last year. But there are these safe harbor rules that make it really easy to avoid penalties, avoid interest, um, and give you kind of a clear picture of, okay, I know I need to pay at least X every quarter in order to avoid that extra payment. Now, you may owe it year end again
Mhm.
if you made more money, which is a great problem, but you're not going to get hit with late penalties or any of that additional junk that kind of fills up our taxes. So, first is figuring out what is your safe harbor amount throughout the year, and then saying, okay, now we just need to make sure we pay that on time. In my experience, the easiest way to do that is to schedule it.
Mhm.
Many people still mail coupons to the IRS
Right.
or set calendar reminders, which isn't bad, but the IRS and your state, who, if you have state income tax, a lot of those websites will allow you to just link a bank account and schedule it.
Mhm.
And so that's what we do with our clients is we go in and we say, okay, we know you need to pay $5,000 on April 15th, June 15th, so on and so on. We're going to schedule those and we're going to make sure that your tax account is auto from your main operating expenses. We're saving the right amount every month so that by the time that comes, it's automated. Because
Mhm.
automation is key. I'm a financial planner, and if I have money just sitting in my account, I will not save it, you know?
Mhm.
And so we get a clear picture of what's your safe harbor? What do you need to be putting aside every month? And we set that up. And then we automate the payments to the IRS or your state government. And that way we're creating an experience that feels very similar to a W-2. It's
Mhm.
just being taken out. It's just being taken care of. Um, because again, especially business owners, they've got 1,000 fires going on in their heads every
Right.
day. So even with the best of intentions, even if you send them the reminder, there's a 50-50 chance that they'll actually get around to paying that on time.
Mhm.
So I find the more we can get proactive and say, what do you need to pay to avoid penalties and interest? And let's automate that, the smoother taxes will be for everybody.
Mhm. And I agree with you 100% on terms of scheduling them and even having money move into a different account. So you don't see it in your regular operating account thinking you have
Mhm.
more money. And then come tax time, right? You don't have it. Because, like you said, they're afraid of tax agencies. They don't want to have them come knocking. But if you put yourself into a predicament where you don't have your money saved up and you can't pay on time, you're going to have that fear, right? So I agree with you 100%.
Yep.
I would love for you also to talk about, LLCs. A lot of people think well, I don't want to be a sole proprietor. I want to have some extra protection. I know there's different types of entities, and a lot of people now select limited liability companies, LLCs. So can you explain to the listener then the impact on their taxes for LLCs versus, what a sole proprietor might be? What might be the pros and cons of each of those?
Yeah, so I think so. You're right. Many people jump into LLCs, and I'm glad you said they're looking for the liability protection.
Mm-hmm.
I find a lot of entrepreneurs just set them up because they read some internet blog that
Oh,
says
right.
you need an LLC for taxes.
Mm-hmm.
And they don't realize that an LLC really is not a tax entity. You don't write LLC on your tax return.
Mm-hmm.
Um, as an LLC, you're signing up for that limited liability. You're signing up to say Leland Gross and PeaceLink Financial Planning are separate.
Mm-hmm.
So if PeaceLink gets sued or has creditors coming after it, Leland Gross's family is protected from their personal assets, which is wonderful. It really creates protection if you do it well. But then the IRS is going to say, well, how do you want your LLC to be taxed? And
Mm-hmm.
that's when you can opt into either a single member, a multi-member, an S corporation. And each of those kind of coincide with a sole proprietor, a partnership, or an S corporation. So if I'm a sole proprietor, well, then I'm fully exposed to federal income tax, state income tax, and self-employment tax on all of the net income of the business. So revenue comes in, we write off expenses, everything else goes onto a Schedule C. And whether I'm a sole proprietor or it's a single member LLC, those are going to be taxed the same because they're both fully self-employment tax. You're going to have that extra 15.3. If I'm a partnership, if I'm in business with a partner, we could either just be a partnership where we're exposed to all the risk, or we set up an LLC and we become multi-member LLC. Same thing. The protection, the LLC protects us, but a multi-member gets taxed the same as a partnership, which is essentially like a two-person sole proprietor. You take the net income, you divide it however the ownership works, and whatever your share is, federal, state, and self-employment tax. Now, the big one that I see all over the internet right now, especially on things like social media, TikTok, is S corporations. And, they will say every day, you need to be an S corporation. You need to be an S corporation. But there's a lot of misunderstanding around that. So again, as an LLC, you get to kind of be a chameleon and tell the IRS how you're structured from a tax perspective. And S corporation, the value of it is it says you can separate when you're owner and when you're employee.
Mm-hmm.
So Leland Gross, business owner, or financial planner is on this podcast. I'm working in the business today. Later, if I'm, paying my taxes, I'm working on the business. And so I can pay employee Leland a salary. And my salary has my federal, my state. And as opposed to self-employment tax, I just pay FICA, but then I also pay the employer side. So really it's the same as self-employment tax on my salary. But then as the owner, I get to benefit from the profit of my business. And the profit is only federal and state.
Mm-hmm.
So that's a really wonderful way to reduce your self-employment tax is by saying, I can opt to be an S corporation inside my LLC or treat it as one from a tax perspective. And then I can say, all right, we have $100,000 net income. Well, for round numbers, 50,000 was my salary and 50,000 was the profit. And now I only pay that 15.3% on half the money.
Mm-hmm.
What I caution people with an S corporation is when you become an S corp or when you elect to be taxed as an S corp, you now have added administrative expenses. So I see things on the internet saying immediately become an S corp. Okay, well, if it saves you, $1,000 in taxes, great. But if you have to pay $1,500 to do an extra corporate tax filing now, in addition to your personal, you're negative.
Mm-hmm.
Or if now you need to run payroll or have more complicated bookkeeping and contract a bookkeeper. So we want to make sure that the tax savings outweigh the added administrative expenses you're going to take on in order to do the S corporation well. But LLCs are wonderful. I tell many business owners, like, do you need to have an LLC? Yes or yes. Just because of that liability protection and the flexibility it provides you.
Mm-hmm.
But when we have that flexibility, we have the complexity. and with complexity comes opportunity. And so all of these decisions need to be kind of weighed on all angles, which is where I love to nerd out and
Right. Well, and a lot of people don't realize too, when you have like an S corporation, or especially if it's a C corporation, but most people, of course, select the S corporation, that they are supposed to pay reasonable compensation. Right. So do you want to touch on that a little bit too? Because you said, well, I'm an employee doing this, but then I'm an owner doing that. And they may not realize, how do I know how much I really do need to pay myself as an employee?
Oh yeah, I was working with someone about a week and a half ago who their CPA wrote down their salary as $12,000. I'm like, if you had audit, that's great from a tax perspective, but if you ever got audited, do you think the IRS is going to question if you paid yourself a $12,000 salary? Probably. So reasonable, the IRS loves to throw out these like vague terms, like just honest and reasonable salary. You're like, what does that mean? Really, the best thing to do is look at your profession and say, what's the average salary that someone in my profession is getting paid? I have someone who owns a local bakery, and their salary can be set a lot lower than someone else who owns a nurse anesthetist business. The lowest average salary for a nurse anesthetist is 175,000, but the lowest average salary for a baker is 40,000. And so we need to kind of weigh those things and really look at, what is reasonable for your field. I have had a couple who are like really doing a unique thing. And so it's hard to set, they can't just Google their role and see. But what we do in that situation is we tend to do at a minimum 60-40. So 60% your salary, 40% profit, 50-50 if you're really, really pushing it. But I just tell my clients, if your fear comes and a group of men in suits come knocking on your door, you would rather have a higher salary, just to reflect that you're doing your best to not just swindle the system and way underpay in taxes.
I've also heard people say, like, what would you pay someone else to do that job? So if you're just hiring someone, what would their salary be? And then that could be your reasonable salary too. And hopefully that is at least maybe close to the ratio, like you said, maybe a 60-40 or something like that too, because again, you do want to limit your, the payroll taxes you have to pay, but at the same time, you don't want to be worried that if you are audited, they're going to say you really didn't pay yourself reasonable compensation. Now you owe the tax you should have paid, plus, the penalties and interest as well.
Yeah, that's a great way to frame it. Is just like, if you were to try and hire someone, no one's going to work for you for $12,000, but if you're going to pay them $120,000, depending on the field, they might be like, this is awesome. Like that may be an abundant salary. So really trying to figure out what is a competitive salary for the position that you're filling. That's a great framing.
Thanks. So then when it comes to tax write-offs, of course, because everyone wants to know, what can I write off? I want to be as aggressive as possible without being, tax avoidant or, getting yourself into trouble. I guess there's the difference between actually legally reducing your taxes and purposely avoiding, paying those taxes. So what would you say to the entrepreneur who's listening about what they can legitimately write off for business expenses?
Yeah, it's a great question. And part of this is also going to be customized to the business. But the rule that I follow is it necessary for the ordinary operation of your business? Like, again, is it honest and reasonable? So, using a portion of your home for your business, wonderful. You can use that. Office expenses, supplies, anything that's marketing, taking people out to meals. I would say the places where I see entrepreneurs get wonky is, they took their wife on date night and just mentioned that they're going to, do something with their business and called it a write-off. And you're like, if you got audited and they caught that probably would not fly. Or people buying clothes for their business. It's like just as a society, you're expected to show up to work in clothes. Like, it's not going to be a specific write-off to your business. Now, if it's a uniform or it's, something with your logo on it, like that would be different. But if you're just, a real estate professional and you want to dress nice, that's not going to be considered that. cars and most things with your cars, whether it's you're doing the mileage or the actual expenses, that's going to be a great opportunity. I see people really trying to get the Section 179 deduction. So with cars, if you buy a car over 6,000 pounds, you can write off a really large portion of that up front. But the tricky thing is, in order to qualify, you have to use that vehicle more than 50% of the time for business. It has to be predominantly a business vehicle. So I had someone who tried to do that. They were going to buy, a $60,000 pickup truck. And when I spoke to them, I was like, "Do you drive for work?" He was like, "No, I just work out of my basement." Like a totally virtual, totally on his computer all the time. I'm like, "Okay, well, you can't just buy a car just to buy a car and call it a business expense." So the way to frame it is, is this necessary for your business? Someone like a real estate professional, they're going to be spending a lot of windshield time. They're going to be driving all the time. They're probably going to qualify for that car deduction more so than someone who's completely remote and can just operate out of their living room. But someone who's given an office can't qualify for the home office deduction versus, someone who's completely remote from their living room. And so you just have to look at your business and say, what makes sense? I'm full on like, run a portion of, if you're working from home, a portion of your internet bill is a write-off, a portion of your utilities, portion of your, like all of that totally counts, but just be reasonable about it. Because if you think the IRS is not, bad at their job, they're not great at their job, but they're not bad at their job. Like they're going to come and they know what to look for. They know people are running crazy things through their business. They know that people are, paying themselves not like an unreasonable salary. So those are some of the first places they're going to go look is, what are you paying yourself? What are your write-offs? And so you just want to make sure you're above reproach at all times. It's not worth getting a small tax discount on your Starbucks to eventually get hit with a tax penalty from the IRS because it wasn't reasonable,
Right. Well, and when that happens, usually it's a few years down the line, and then they charge you interest back to the date, that your tax return was filed. So that little tiny bit you may have saved now has compounded because you've got the penalties and all of that too. So yeah, it's not worth it.
Like something like 8%, 7 or 8% on your taxes right now with the IRS. And so, yeah, really not something you want to mess up.
Right. Well, and I think a lot of times people just don't even understand what's considered ordinary and necessary. I know I had someone come to me once who got hit with a tax penalty. They had been audited, and then she had to kind of get her bookkeeping together because she was just kind of by the seat of her pants, just, keeping things here or there, but didn't have a lot of documentation. But as I was helping her put things together and starting her bookkeeping, and I was explaining, like, you're spending a lot of money on groceries and meals and all of that you want to put through the business, but technically that's not a write-off. And she's like, "Well, what do you mean? I work every day. I need to go buy lunch." Right. And trying to have that explanation that the IRS wants you to be meeting with someone, talking specifically about the business. You need to document, the meeting and why you had it and things like that too. So do you want to even touch on maybe when you can write off meals, when you can't, what are the deduction amounts, just so they're clear on what they really should be doing when it comes to those meals?
Yeah. And you're gonna test me here. But so you're right in saying if you're gonna write off a meal or you're gonna write off coffee, it has to be for a legitimate business purpose. It has to be you are in a meeting with someone or you're taking a client out and treating them to something and you are talking about the business, you're talking about what you do. It is not, my wife works in the business sometimes and, we're going to just go on a date and, the example I gave earlier. And it's not, "Hey, I'm just working today and need to go eat." Again, like you're expected to show up to work in clothes. You're also expected to find a way to feed yourself. Like you pay yourself from your business, you can buy food. But it's not a business thing. Now, a common misconception because of the COVID era, it used to be for a handful of years, 100% of the cost of the meal was deductible.
Mm-hmm.
What most people don't know is that in the last couple of years and going forward, it's only 50%. Which the way to think about that is if you're treating a client to a lunch, the IRS is really just saying you can write off your client's lunch,
Mm-hmm.
not yours. They're not going to have you itemize your receipt. They're just going to take half the cost of the meal. And so it really isn't even that large of a benefit at that point to really try and finagle the meal deduction.
Mm-hmm.
Uh, but it has to be legitimate. I really agree with you. Keep receipts, document what it is. A best practice is just write it on the back of the receipt.
Mm-hmm.
You your receipt on the back, took out a referral partner to lunch to discuss our new product.
Mm-hmm.
Great. Wonderful. File that away, scan it into your QuickBooks, whatever your logging system is, which have a logging system. Like
Mm-hmm.
don't
Right.
give, don't give an IRS agent just like a shoebox of receipts. And really that will keep you above reproach. If you have a reasonable explanation for every expense, you've kept the receipts, and these things are used for business meetings.
Mm-hmm. I agree with you too on the storage and how to handle that too, because a lot of those receipts fade, so if you're audited in 3 years and you haven't really stored them well or taken photos of them, you might not be able to easily prove, what those were for as well too. So that's the downside of keeping that paper in a little box somewhere too, and hoping that they will still be good,
Yeah. And I know some bookkeepers or CPAs who will say, like, it's the IRS's job to go through it. So, like, you don't need to keep it super organized. And yeah, that's true. But if, like, you're trying to get in great rapport with the IRS who's auditing you and you hand them a shoebox of faded receipts and they're seeing expenses and they can't figure out which receipt goes with which expense, it's not going to bode well for you. So, like,
Right.
yes, you probably could. Like, at the end of the day, you give them, here's my receipts, and their job is to go through it. But it'll be really easy for them to miss something, or like you said, a receipt to be missing or faded, and
Mm-hmm.
that's not going to bode well.
Right. It's in your best interest to have the proof of your deductions, right? So they're like, oh, yes, this is valid. Okay. Rather than saying, oh, you don't have the proof. Now you owe tax, right?
Yeah, totally. Yeah, you owe taxes from 3 years ago with penalties and interest on it.
Mm-hmm.
Yeah,
Exactly.
not a fun experience and
Mm-hmm.
again, like, not every single person gets audited, but there is an opportunity. And I would say if you are self-employed, you have a higher risk of being audited on average than the regular W-2, because they know that that's a big way that they're losing money because people are
Right.
doing all these things that we're talking about.
Mm-hmm.
So they're going to
Exactly.
try and crack down on that.
Well, I would love for you to share maybe an offer that you have for our listeners. And if they are interested in connecting with you, how can they reach you?
Yeah. So for anybody who comes through the doors of PeaceLink, we do a free hour-long consultation where we build out what I call a one-page financial plan. It's kind of the high-level solutions of based on what you have going on in your life and what you hope to achieve. Here's the things we would do and we topicalize it. I don't think topicalize is a word, but we
That's
make
right.
it topical from um, tax action items to investment action items, insurance, estate planning, cash flow, things like that. That's totally free of charge, and there's no sales pressure on that. So that would be a free offering, is just kind of a free discovery meeting with a one-page plan attached to it. If you want to connect with me, there's a few ways that you can reach us. One is at our website. It's PeaceLink FP. So PeaceLink, F as in financial, P as in planning.com. And then that same PeaceLink FP is all of the business's social media handles. So Instagram, Twitter, Facebook, LinkedIn. You can find us at PeaceLink FP.
Perfect. Well, thank you, Leland, so much for being a guest on my show and talking on this topic. I really appreciate it.
Thanks for having me.
Sure. And to the listener, if you enjoyed today's topic and you want to hear additional information, you can find access to the exclusive content in the show notes. Thank you for tuning in today. Would you please share this episode with those you know and leave a review on your favorite platform? And if you find our show informative, would you consider being a financial sponsor to help me continue my mission to educate business owners? A link is located in the episode description, and no amount is too small. I'd really appreciate your support. If you are interested in connecting with our guest and receiving the offer they had to share, A link to our resource page is in the show notes. Finally, if you have any bookkeeping or payroll needs, reach out to us at 310-534-5577 or contact@abandp.com. My team and I are eager to assist you. Until next time, have a great day.
Thank you for listening to Biz Help for You. Please join your host, Candy Messer, again next time. Have a terrific day.